the revenue for the state government or to the central or to the union territory is increased after GST is introduced. GST return filing is done through online only, so there is no offline return here. Always it is an online tax payment. If services are rendered from one state to another state, then the tax would ultimately go to the consuming state, where the benefit has been given for that state, the benefits will be given here. Warm welcome to B.Ba student. The subject we are discussing Goods and Services Tax, Unit 2, Goods and Services Tax Framework and the definition. In our previous session, we have discussed about what is GST, advantages of GST, and even dual model of GST. I am Professor Rajesh L.R. from Department of Commerce and Management, Vidhyaashram, First Grade College, Temple of Excellence, MYSURU. In our previous session, we discussed about the features of GST in India and advantages. What is GST? One nation, one tax, and dual GST model. These are the concepts what we have discussed, and which is going to be benefited for the young entrepreneurs as well as for the existing business people also. In today's session, we are going to discuss about the difference between IGST, CGST, SGST, UTGST, and the distribution advantages of dual GST, and what is the impact of GST on country, central government, state government, manufacturers, service providers, traders, and agricultural sector. Now, these concepts will be, whether it is a positive or negative, or what type of changes has taken place on these concepts. What is the impact we have here? Now, the difference between IGST, CGST, SGST. We are going to learn in simple, and there will be a compulsory question in the theory concept. Briefly explain the difference between IGST, CGST, SGST, and UTGST. The first difference, we can write it here, applicable transaction. So, applicable transaction for IGST, it is interstate, means where the goods or services from one state to other state, when we provide or supply the goods. At that concept, IGST is going to be levied, and the benefit of thing will be given to the central government as well as state government, and tax is collected by the central government, and usage of input tax credit, first it will begin for IGST and then CGST and SGST. This is the way of benefit given whenever we have excess of tax paid. And second one we have here, the applicable transaction is within the state, within the city. If supply has taken place, the CGST as well as SGST is going to be levied. CGST and SGST, like for example, if it is 18%, so 9% will be CGST and 9% will be SGST, and the amount of tax will be collected by the central and 9% will be collected by the state. Benefit for central and benefit for the state, and the excess of tax credit, if we have that, first can be adjusted with the CGST and the second one with IGST. And here the first benefit for SGST and second benefit for IGST amount can be used to get the beneficiary. And the same concept what we have here, central and UTGST, if it is 18%, 9% for UTGST and 9% for CGST, and again it is inter, like within the union territory, if goods are supplied or the services are provided, then CGST, UTGST is applicable. Central and the benefit for the union territory, and the tax is collected by central and the union territory, and the first preference of tax credit available will be given for UTGST and the second preference for IGST. This is the difference what we have, and it is very simple. Understand the concept and go through thoroughly. Next, we have a distribution of IGST and CGST. Whatever the amount of IGST is collected, the GST on supplies of the goods of interstate trade, commerce shall be appropriated between union and state as per the prescribed by law. They are saying that whatever the IGST is collected from the process of supply or the services given by the state or the union territory, based as per the law, rules and regulation or the GST Council, the benefit will be given for state as well as union territory if it is collected the benefit from the state or union territory. Distribution of CGST among the states. Whatever the CGST levied and collected by the central government here, other than IGST, the same will be distributed to the union territory or states in the manner suggested by the Finance Commission as per the amount collected from the process of supply or the services. Whatever the funds has been received by the central government, it decides what type of benefits can be given to that particular union or to the state as per the discussion with the finance minister, what amount of benefit can be given from the amount whatever the central government has collected and how they are going to use those funds for the future benefits of the society or betterment of the society. Advantages what we have, it is a decreasing tax rate. So the tax rates are uniform in the nation. So there is a decreased tax rate. The elimination of additional tax on tax has been reduced here. Lower tax rates across the country. Complexion of taxes is now there is no headache for the business people or the consumer where the tax is levied, how the tax is levied, and what type of tax is levied. Nothing is here. It is only one tax, GST. That's it. Earlier, we had 7 to 8 different types of taxes which were levied either in the state or in the central, or sometimes it may be 12 types of taxes which were levied on the goods and the services. Now, the taxpayer can generate e-invoices online in the dual GST model. So, he can generate the GST, that is e-invoices online in the dual GST model, that is CGST, SGST, CGST and UTGST. On this concept, he can generate the e-invoices and get benefited, and the tax can be calculated easily. There is no to break the head how much I have to collect, what is the percentage. If I just register in the e-services of GST concept, immediately we'll get to know each and everything after the registration. If I just add the concept of supply or the services, whatever has been provided, and the cost details properly, if we provide the details over there, it just calculates the GST liability, goods and service tax liability, and how much is for central and how much is for state, and what is the input tax credit available for the present person who is selling the goods to the other person, like manufacturer to sell, wholesaler to retailer, or retail to the ultimate consumer. Next benefit, increased tax revenue. The revenue for the state government or to the central or to the union territory is increased after GST is introduced. Next, Instabill allows the taxpayer to generate e-invoices easily and quickly along with several other options and features. They're saying that when the bill can be raised if you are a registered user, and the bill can be raised easily without any hurdles with all the informations provided properly and true and fair. Each and every taxpayer is given a PAN-linked taxpayer identity number of 14 to 15 digits where they have to expose that number in the business place with a bold one, and it should be viewed by all the people who are getting the benefit of service or the consumers are there from whom the tax is collected by the business people. The number should be displayed in the business place. GST return filing is done through online only. So there is no offline return here. Always it is an online tax payment, and the documents are required standard way for both central as well as for the state GST. There is a normal rules and regulations are there, and the simple rules and regulations are there. If we follow and if we understand, it is very easy and it is benefited for all the people here. As GST, dual GST provides competitive atmosphere for countries to work on an international scale. However, the single taxation system supports the customers with reduced cost. They're saying that with the help of one nation, one tax concept, and the same tax rates applicable in all the states and all the places, and there is no tax on tax concept, the cost of the product is reduced, and now the products can be bought by any common person also, and it is not like only for specified persons or like for only stipulated people can buy these products. Not like that. After introducing GST, the tax rates are reduced, the cost is reduced, even anyone can buy the product or anyone can get the service for the products. GST law in India is a dual GST concept. Both central and state levy concurrently on a common base value. On same base value, they're going to calculate the tax rates here. And what are the benefits are there? Here we have impact on the country. The flow of foreign, see now from other countries, they started to or establish or invest in Indian market. There's a benefit, and where the Indian government is getting revenue and support and investors coming from different places, from the different nations to invest in the Indian market. GST could also result in increase in employment. When the new nations are coming and establishing the business in the Indian market here, now definitely there will be exposure for the employment, and even which reduces the burden of unemployment issue in the nation. Next, what is the impact on the central government? Earlier, it was collecting 2%, and according to the state government of collection has been into GST, this revenue would not be available to the state government. So whatever the CST they're collecting, central sales tax 2%, the benefit was given. Now they're merged and they made into normal GST only here. The collection of taxes CGST, IGST would increase when more and more assessees register under GST. They're saying that one, the benefit of revenue for the central government will increase when the number of people increase to register themselves for the brackets of GST, and they're going to enroll the business sector under one concept. Earlier, it was difficult. Now, it is made easy for the business people to start the business, and even existing business can come under the bracket of GST and get benefited from all the sources, whatever they have. In the society, the corruption will reduce and increases ethics gradually. Means the fraudulent activities can be reduced and the benefit can be given for the consumers, and there will be a healthy relationship between the manufacturer, wholesale, retailer and consumer, and with the government also. What are the impact on state government? After new introduction of concept computerization, tax is made easier and cost of collection taxes would be less. They're saying that one, the cost of tax means to collect the tax only they're charging huge amount, so that has been reduced. Now everything it is online, and they made electronic concept introduced here, so there is no need to charge highest amount of collection charges for the payment of taxes here. And states which are net consumers would benefit due to the accrual on destination. The producing states may have a comparative advantage. They're saying that the goods where it is produced, for those states it is benefited because it is a destination based taxes. Impact to the manufacturers. Exports would be cheaper as tax paid earlier stages could be refunded to a large extent. They're saying that for the people who are exporting goods from our country to other country, where at the time of acquiring the raw material, the manufacturer has paid the tax. At the time of collecting the tax GST on the goods supplied to the other nation, now the amount already which has been paid can be set off. The remaining amount only is going to pay as tax to the government. Now, this is going to be benefited for the exporters, and number of exporters are increased in the market. Manufacturers having a value of clearance of less than 150 lakh were exempt under earlier excise law. Now, at present matter, administration has been dissolved. 90% of dealers having turnover up to 150 shall be administered by state authorities and 10% by the central authorities. They're saying that if the turnover is up to 150 lakh, 90% rights have been given for the state and the 10% rights have been given to the central authorities. For the service providers, if services are rendered from one state to another state, then the tax would ultimately go to the consuming state, where the benefit has been given for that state, the benefits will be given here. Under one nation, one tax scheme, GST, the law of service tax would be levied not just by the central government, but also by the state government in the form of CGST and SGST. For the traders, for the wholesalers and the retailers. Impact of tax on wholesaler retailer would limited to the value addition. The tax paid by the wholesaler can be set off with the amount collected from the retailer. The retailer can set off the tax amount whichever is earlier paid with the amount collected from the consumer, and here the tax are collected by the retailer from the consumer and he is going to pay tax to the government. So now the consumer is not going to pay tax to the government. Consumer is going to give the tax amount to the retailer or the business person, what we are going to call that business person has to collect the GST and he has to pay to the government. Stock transfer from one state to another state is liable to GST. They are saying that if, even though it is your stock also, if the same business stock also, when it is moving from one state to other state, the GST is applicable, thinking that when it is a supply of goods. Small traders are eligible for the composition scheme up to 1 crore provided aggregate turnover in the preceding financial year did not exceed 1 crore. If their turnover is not exceeding 1 crore, they can take composition supply scheme which supports them and where they're going to charge only 1% tax on the goods and services. Impact of agriculture sector. Earlier, the tax rate in the agriculture sector was 6%. Now, for the farmers, it has become burden. Like, for example, if they want to buy a tractor, for buying the tractor, they're going to pay 12% GST. But for the accessories, the additional components, what they want to buy for the tractor, for that it is 28%. Where all the accessories for motor vehicles, it comes under the bracket of 28%. Even it is for the Benz car or even for the tractor. Now, the government of India or the council, GST council, has to rethink and restructure the tax on the accessories on certain goods used by the consumers. Even whatever the charging is right. We are not saying that the tax rates are perfect here, but they should think that one for LMV and what we have here, LMV vehicles, as well as now what we have HMV vehicles, whatever we have here. So on that one, they have to think and what rate has to be fixed on. Based on that, if they fix, like for the tractors, they can charge like 18% for Benz car, and the value of the car or the asset what we are going to acquire here. Based on that, they can charge the taxes. Like for example, for huge investment on the asset, they can charge 28. For less investment, they can charge less tax rates, giving benefit to the farmers, because with the help of farmers, the economy can be increased here and it is going to support to the nation also. In the upcoming session, we're going to discuss Article 279A and GST Act and the sections and the schedules, whatever we have here in our GST, intrastate supply and interstate supply. And even we're going to discuss about the explanation of person, taxable person, registered person and unregistered person, and the meaning of related person, distinct person, casual taxable person, non-resident taxable person, regular scheme and composition scheme. These topics which we are going to discuss in our upcoming session. Namaste to all our 6th Sem BBA students, and today's session, it was very important and beneficiary for the young entrepreneurs if you go through the entire concept of this session. Thank you to all our BBA students.